Heidi ho, everyone, and thank you for joining me for today's session of Trading Buddies. I'm glad you could join us. Ash, of course, will be with me very, very shortly. I hope you had a great weekend, all of those things. Happy New Week. Where are we? In the third week of June already. My goodness me, half the year is just about done, guys. Is that exciting? Probably not. Good for some. Who cares? Um, I wish I could find my control panel. That'd be good. There it is. Okay, let's get stuck in, shall we, and have a look around the place and see what's going on and what we need to do, if anything, about this gold breakout trade. You guys who do know how this works won't need any explanation, but those who don't, just very briefly, what we attempt to do each and every day that we trade is see if we can find good reason to trade a breakout of Asia session. Now, Asia session begins, it's actually the third candle, but I'll use the second. Been using the second and working just fine. The second candle of the day, hourly chart, of course, is what we're looking for. And here's the low of that range, and here is the high of that range. We're pretty much bang in the middle of that, which is exactly where I like to be when I'm trading breakouts. Thing is, we have traveled a good distance. Why am I here? Sorry, here's today. I was using Friday. I'll wake up in a minute. It is Monday after all. There's the low of our range. And that makes a big difference. There is the high of our range. So it's basically Asia session to now is what we're looking at. So we're not in the middle of that range, sadly, because that's where I like to be. And the reason for that is it gives price chance to work itself out. So oftentimes when you get to London Open, the market will go zip one way and then zip the other way, which is one good reason why I don't trade the first 30-minute candle of London session. That said, if price were to sneak its way back up here, I'd be more than happy to place this trade. Now, in terms of risk to reward, I'll go a little bit tighter. We don't need the historics at the moment. We just need the range. So the range is high of this bar, which is the second candle of the day. And that is around about your 23, 29 mark. Low of the day is around about 23.15. So you've got about $14 of range here at the moment. Like I said, I don't want to enter if price is near the bottom of our range or the top of our range, because price can slip very quickly from there up to there. Whereas if it were here in the middle of our range, around about the daily pivot mark, we've got plenty of room to have a false start, if you like, to the session. And that's where I much prefer to be. So I'm likely not to place this order. And if we have a look at the potential risk to reward here, there's the high of our range. So our entry long, risking, as I said, about $13, $14. Your first form of resistance comes at about half of that. So it's a half to one trade. And the second lot of resistance, if you're trading DR1, that's a different story, which is what we tend to use, the pivots. So that's a little bit better than one to one. But down to the first support, which is DS1, you've only got about $2. So that doesn't make a lot of sense to me from a risk to reward point of view. To go short, if you're prepared to trade through that, it gets a whole lot better, of course. Because we're down here very close to our entry short, I'm choosing not to take this trade. So be no breakout today. However, if you were here last week and trading us for the first time, you would have had a winner. It would have taken you a long time to get there, I've got to say, because I think we entered the market here. And it took till the next day to get to our first take profit. In the meantime, there was another trade on Tuesday, which also would have been entered here at the top. And again, it would have taken a long time. Not sure where that take profit was. I wasn't trading this. But the news candle on Wednesday would have absolutely got you to the profit. On Thursday, might have been a bit of a problem. Your high would have been here. Your low would have been here. So, yeah, what time of day is that? Yeah, way too. You would have been taken into the short and got hammered on Thursday. But on Friday, you would have got the bickies again. So Monday, Tuesday, Wednesday, and Friday were all winners on this breakout last week on gold. But not today. I'm not going to take the trade today because we're too close to the bottom of the range, and I don't like that particular scenario. Righto, so what are we going to do today? Well, we won't forget gold. We'll have a quick look at gold and see if we've got a directional bias on it. My directional bias is still short, but I'm not that enthused by where price is at the moment. It will come back, although there is a reversal bar sitting there. Nah, it's up, down. It's a bit like father's pants, isn't it? I think I'd leave this. I'd prefer it to come back to this confluence area, I think. So monthly pivot trade line looks pretty cool to me, which is also a trend line. I'd like to see what price does at that area, actually. And it wouldn't surprise me in the least if price were to go back there. Haven't really had a neckline break if you consider this to be a head and shoulders formation. That concerns me a little bit also. I think I'd rather pick it up as a false break off this level. That's gold. But I'm, not committed to anything at the moment as far as gold is concerned. Update. Were you guys, I think you guys were on Euro Swissy. I'm not 100% sure on that. But if you are in Euro Swissy, we've trailed our stop down to above Friday's bar, having ended up here as that nice false break scenario. We've now hit TP2, which was here, and I do expect we'll see a bounce here. This is a potential bounce, if you like, off the backside of this weekly trade line, which is pretty clear to me. So I do expect a bounce here, but I also expect this to go further short. The trick's going to be staying in the trade and how far this does retrace. I've got that retracing to around about 95.75, which is that line there, which is pretty much where we took our first take profit. I would actually be looking for a scale in around about that level. If it comes back and takes our stop loss, so be it. The trading stop, we've taken 3 lots of profit now on this, so all good. But here's my target down here, 94.15. And if we can find a way to get there with another entry, that would be good. We are at a support level, however, right now. So nothing to do except wait and see. Now, I have done the unmentionable thing here and taken a short CAD versus, wait for it, the Japanese yen. My God, how did I talk myself into doing that? I don't know. It is a very small position, however, and I think that's probably the best way I can approach this with the yen. The yen's just a nutcase. That said, I do have a nice double cross on the monthly pivot. Those of you who don't know, on the weekly pivot, sorry, yes, a double cross on the weekly pivot. Those of you who don't know what I'm talking about, double cross for me is prices come down on the back of a weekly game changer bar. So that game changer bar last week, which didn't trigger, of course, price didn't trigger it, has now had an inside bar to back that up. I call that a game changer plus, but it's also given me a break and retest of the monthly pivot, which is where I get my double cross from. So one down, one back, inside bar, and that's an automatic entry for me underneath that bar. I have been a little bit more conservative than I would normally be, and the reason for that is, or should be clear, because the yen is just, as I said, a nutcase or a basket case, and I just cannot find any confidence in it at all. That said, we've got this massive bearish engulfing bar. We've got a lower high sitting here. So I think this is worth a shot to actually get into the action. If it does, and this is the reason, and Ash and I have spoken about this many times, if you're not prepared to take a small risk on this reversing at some stage, and with a setup to boot, you're probably not doing the right thing, because it will go eventually. This will go, and when it does, the pip count that's available is just ridiculous. So I'm not saying this one's the one, but it is a setup, and that's why I'm taking. Got a few others that I am interested. There are a couple of things here that really annoy the crap out of me, and they are all around bloody news events. Every time I see a nice setup, I also see news pending. And news has been very, very poor to me of recent times. If I've stayed in a position which is not at TP1 or is in negative position, it just gets worse. And if I don't, then it would go my way. So I just cannot pick anything around the news at the moment. And that said, I've now entered a short on Aussie versus the dollar. So I haven't entered the trade, but I have placed the order. I'm actually thinking very seriously about cancelling this already, because we do have an RBA statement out tomorrow. The thing I like about this, however, is pretty much this horizontal level, which is around about the 66 cent mark. And price has stalled, I suppose, for want of a better word. If I go back to a long time ago, we were talking about the Aussie and this big double bottom sitting here, or tweezer bottom, if you like, sitting here on a support trade line. Well, it actually did what we anticipated it might, and that is go straight to a resistance trade line. I actually expect this to go further than that, up to around about the 68.5 mark. But I do see a serious stall at the moment, and I see this horizontal level around about the 66 cent mark, as I said, as a potential false break. Last week's bar was extremely frustrating, and there were a lot of frustrating bars last week, given all of that news event, especially on the dollar. And this has thrown complete confusion into my setups, and I really think I'm going to cancel this already. I'm not that enamored by the position, so I'm not. I'll tell you what it is, but I'll cancel it straight away. I will have a look at the indexes while I'm here. Dollar, we have, pardon me, bounced off not only this horizontal level, but the support trade line is the word I'm looking for. And to my mind, it looks destined to go back to that resistance trade line. So it might be 106. Whether that happens by the end of the week, who knows? But I do think this has got further upside. Aussie, as we just looked at, 100% no idea. Absolutely could go either way, in my humble opinion. So not that strong, not that weak. Canadian dollar looks to be refusing to get through this trade line, pulling back away from it now 1, 2, 3, 4 times in a row, and looks to my mind as though it's going to retest this low of the box range. So I'm not at all enthusiastic about the CAD. Pound I'm less enthusiastic about. We noted last week that we had put in this key reversal bar or game changer bar, which, and these candles, which are fairly typical of what happened to currencies against the dollar in particular last week. Big outside bars and very, very difficult to stay in a trade if you were in it. This looks like a serious game changer bar, however, and for that reason, I'd have to be bearish the pound. The Swissy, quite the reverse, frankly. It looks to be on fire at the moment, having now come back into this range that we've been watching since forever, it seems. And after refusing once, twice, 3 times, 4 times, it actually smashed back in there. It survived last week, as I said, far better than most. And sorry, that's last week. And I think that this has got further upside. Maybe a little bit of a pullback, but if I'm serious about trading, then I'm thinking I've got to buy the dips on the Swissy. Kiwi, still above our breakout level, and like the Swissy did a lot better against the dollar than most did last week. Yes, it came off its highs after that big spike, but it's still looking as though it wants to go higher. So I'm a little bit bullish the Kiwi. I'm a lot bearish the pound, bullish still the dollar, and the yen. My God, how did I trade this? Don't know. But it does look to have formed a little bit of a base here. The trade line is an issue, but we have come off the bottom of this range, and that suggests to me that we'll probably look for a little bit of upside. I just laugh every time I think about this, but sooner or later it will happen. Just don't know when. It's like that. What was her name? One of Rod Stewart's females. No, I can't think of her name now. Pantene, I think, was the product. Won't happen overnight, but it will happen. What was her name? Luscious Blonde. Hello,
was
mate.
it? I lady. Was it? I know you
She was a
mean.
Kiwi, as a matter of fact.
She was.
Well, probably still is. I don't know if she's dead.
I can't remember
Yeah, I
either.
can't think of it either.
It's on
You
the
know what
tip
I'm
of my
talking about.
tongue in a way. It's on the tip of my brain, but I can't think of who it is.
It'll come, mate. Won't happen overnight, right?
Yeah.
Right, and so to the euro. The euro looks to be in trouble as well. Not sure there's a lot of downside to be had with the euro at the moment, but it does look destined to find the base of our triangle there. Where does that leave me? Well, it leaves me with a strong dollar, a strong Swissy, and a weak pound and a weak euro. I think that's the conclusion I've come to from a technical perspective. Tradable. Look, I think Aussie Swissy is a good one, other than the ones I've given you already. Aussie Swissy, let's have a look at that. Aussie Swissy, because I think the Swissy's strong, right? And we've also got this false breaks setting up nicely, or has already set up nicely on the Aussie. The only issue is that we've got to get our entry below this level here, which is 58.87 as I've got it. Got to get your entry below there. So far, price playing ball with that. And I would like to see this tomorrow be a bull bar, or today's candle close as a bull bar. That's the weekly I'm looking at, but the daily is the same. So we've stumbled here at that level I spoke about. If this were to close up here somewhere, round about the weekly pivot would be perfect. I would look to trade this short tomorrow, and that is Aussie versus the Swissy. I am going to cancel my Aussie dollar trade, and this should give it an ideal chance to go short, of course. I've since rethought this, and I don't want to be stuck in a position before the RBA, and I don't think it's going to go too far before that announcement. What I would like then to do is have a look at pound versus the dollar. And that's got a massive game changer bar to the downside again. And it is the second bull where it's probably the third. Does look like a head and shoulders sitting there, but we have pierced that neckline dramatically and bounced back off it. A little bit tough for me to get in right now, but any retracement here, I think, is a sell. And like I said, I know we're in Euro Swissy already and have been for weeks, but I think anything pound, Aussie, CAD, anything that rallies can be sold off, I think, against the Swissy at the moment. I think it's the strongest one on the board. And that's kind of where I'm at, mate. How about you?
Yeah, sounds good, mate. I have to say, a lot of what you're saying, I totally agree with. The pound, particularly, I think, is the most interesting currency this week. And the reason for that is because, technically speaking, it's looking like it might sell off against a few currencies, particularly against the dollar. But we've got a CPI print on Wednesday and then a Bank of England rate decision on Thursday. Which makes it fascinating. But and where I think it makes it more interesting is that, well, it's twofold actually. The first thing is that I think that the inflation data is going to show that the UK has stepped back into the target rate of interest. Target rate of inflation, which is 2%, and maybe even below. That's the first thing. But the second thing is that if the Bank of England are then to react the next day, they may be seen as adding some position to the political system because there's an election on July the 4th. Yeah, right. So what do they do? And it's, there's a lot of people saying that they won't, because the one thing about elections, and this is where it makes it tricky. So if they see that inflation is at 2%, they should be lowering interest rates the very next day, because of other factors as well, of course. But that's the kind of main one. So they see inflation at 2%, they should be lowering interest rates the very next day. To my mind, if they don't, that is more of a political statement than if they did, because the mandate is to get inflation under control, and they got inflation under control, and then they don't lower interest rates. So to my mind, that says, well, we are effectively saying the Conservatives are still squeezing us, so the Labour government can step in and save the day. The problem is that the Bank of England are not allowed to comment when there is an election period going on. So if they did lower the interest rates, effectively they're not allowed to qualify what the reason behind the interest rate decision is. I mean, they can have the statement, but after that, they're not allowed to kind of get involved in any kind of speculation on where it might go in the future, or where it's one of the reasons we've kind of got here. So it's a very difficult position.
Hang on a minute. That sounds bizarre to me.
Yeah.
Is this isolated because of an upcoming election, or is this typical?
Yeah. Yeah. So any election, they're not allowed to. They're not allowed to.
Sorry, I missed that bit.
Yeah. So when there's election campaign, the Bank of England have to halt all press conferences. Effectively, they're not allowed to speak to the press, but they're allowed to do the rate statement after it. And in the rate statement after it, I think that would be long enough for them to qualify. But they are not allowed to talk about it before or after that particular statement, because they're not allowed to be seen as political. They're not allowed to be seen as sort of like having any political action. So it's a tricky one, because the pound, to my mind, the inflation number will come in weak and the pound will go lower. The Bank of England then may well hold interest rates, even though they shouldn't really, and the pound may get a bounce. I do still think that will be short-lived, however, because I think that then the speculation will be, okay, fine, they're leaving interest rates where they are this time, but they're definitely going to lower them next time, and the pound ultimately, to my mind, will sell off. So I would use it this way, and the way that I would see it is this way. I think that there is a sell going into the CPI data. I think the CPI data creates this is the way that my imagination would work. I think the CPI data will push the pound down, and I think that's across the board. However, I completely agree with your thesis of the Swissy being the currency of choice. I don't particularly like the price, but the price action, I should say.
Swissy, it's already moved.
Not really. It's sort of it's gone a long way already, and it makes it less attractive. But I do think that's the right currency. Fundamentally speaking, I should say. I think that's the right currency.
That was my trade of the week last week.
Oh, nice choice, mate.
Oh, you didn't get
choice. Oh,
no, it didn't set up. It needed to pull back a little bit further for me. Just didn't get the price.
Right. Well, I think that might well be the case again this week. I mean, we'll see. The pound might well bounce against everything before that CPI data comes out. There might be sort of some speculators pushing it up, and then we see the turn. But that's what I think is going to happen. I think the pound is going to turn lower on Wednesday. I think there's a decent chance the Bank of England hold interest rates. The pound then bounces on Thursday, and that, to my mind, would create a decent selling opportunity if there's a decent bounce. So if you can get the bounce on Thursday on the pound Swissy, and it's one of those that we might need to be a bit more patient on, then I think there's a trading opportunity. So sell the rips for me with a pound, particularly against the Swissy. The one I find quite interesting of your trade selection is the CAD yen.
All right. Yep.
And the reason that I find that interesting is that and I'll show you where I've actually taken a dollar yen short. And in some respects, they're not the same trade, but they're close bedfellows. The pound, the dollar yen, and the Swissy and the CAD yen.
Dollar yen has this incredible nuance about it that I've never been able to capture, and I've spoken to Julian on this many times, and he reckons I'm an idiot because I can't follow how it works. But I just can't. It's not in my psyche to something weird's happened. Oh,
well, let me
All good.
I'll just tell you my thinking on it, mate. And this is,
Okay.
you know, the reason I've decided to take this one on short, and it's a short. The first thing is we are at resistance. You know, there's a pretty strong line here. We've had a couple of pops above that particular point, but there is a pretty strong line of resistance. It failed here and it failed here, and it had a decent move away. You know, when it kind of came back up, when eventually it broke below here, this point again, it failed. It failed here. Now, are we going to see something similar where, you know, price breaks below that resistance and comes down? Well, that's what I'm banking on. Now, the reason I'm banking on it is you know, for trying to avoid repeating myself, it's twofold. In fact, it's threefold in many respects. The fundamental data coming out of the United States is weird and a bit patchy and a bit and a bit in conflict, because if we look at growth is choking in some metrics. So certainly in the manufacturing PMIs, growth is choking. And if you look at manufacturing PMI and you compare that to how it ultimately affects GDP, it's got a much higher correlation with GDP than the services sector, even though the services sector drives the economy. So manufacturing PMIs are weakening. Unemployment, I don't know if you saw, but the unemployment rate took a massive jump last week. Yet there was some jobs data that was really strong. So there's a bit of a basket case going on, but there's definitely uncertainty, you know, with the United States economy. The COT data is benign when it comes down to the United States dollar, but it's really strong for the yen, in as much that speculators are so heavily short that, as you quite rightly pointed out, the chance of the yen turning and turning hard increases because everybody's on one side of the boat.
Yeah.
So eventually that's just going to topple over. Now, the other reason, which is the strongest reason, really, I mean, it's not the best indicator, but the strongest reason this time out is the dollar yen seasonal pattern. And the reason that the dollar yen seasonal pattern is so good, and I haven't compared it with the CAD, to be fair, but because I tend to compare everything against the dollar. But if we look at the dollar yen seasonal patterns, the dollar yen seasonal bias is the closest in correlation. The dollar tends to be weak at this week, only this week, and against the yen, and the yen tends to be strong against the dollar this week. But it's the correlation which is interesting. You know, this is sort of like something that I think maybe gets kind of forgotten about when analyzing seasonal charts. People will look at the seasonal, and I do it as well, you know, but there are times where I think a correlation sort of like actually maybe gives us an extra leaning towards a currency pair. So if you look at something like the pound tends to be weak this week, and you know, going into the month is a bit stronger. Now that's historically that tends to be the case. What I like to look at is the prior history. So is sort of like the run up to this particular point, like in sync with what the seasonal pattern tends to be at this particular time of year. And if it's not, because seasonals are either ahead or behind, then it gets less weight for me. So if I look at the dollar yen, it's got the most weight because the seasonal bias is much more correlated with the historical bias to this point of the year. So we do, you know, we have sort of seen that the seasonal kind of patterns do what the price action is doing, if you like. You know, you could almost put the chart and superimpose it on top, and they match much better than anything else. And the seasonal pattern this week points to a weaker dollar, so that's why I've gone for it. I will check the CAD yen for you while I'm
have a squeeze if you wouldn't mind. That'd be good.
Yeah, I'll have a look at that, because in my joy of finding a trade against the dollar, I suppose, I didn't consider that actually it might have been the CAD yen.
Well, so we've got a bit of a loggerhead there because I'm still bullish the dollar.
Yes.
And I'm not as bullish the dollar as I am the Swiss. So I'm more than happy just to stick with the Swissy and sack the dollar. Interestingly, BOJ is out this week as well, isn't it?
That was last week.
Last week, was it? Okay.
Yeah.
I must have gone missing.
Yeah. No,
Well,
I don't know if I'm
unusual for
gonna.
me towards the end of the week.
Yeah, and they left interest rates on hold. Oh no, I'm gonna struggle here now because I can't remember. I've just Microsoft updates your search profiles and all this sort of thing to give you the new AI search engine.
I do the pricks, yes.
Yeah, they've just done that, and they've lost my login my saved logging
Oh
details.
man, it just
So
drives me nuts. Really does.
yeah, I don't know if I'm gonna be able to get into the website I need to, but I'll try. And I'll see if I
This is
can
to find the
find.
CAD, right?
Yeah, this is to find the CAD yen for you and sort of like see what
Yeah,
that's
okay.
suggesting.
I'll tell you, you were talking about the dollar there a minute ago. I was listening to Kathy with one of her posts that she does on YouTube,
Yeah.
and man, wasn't she giving it to the Fed? Thinks they're
Uh,
all a bunch of no hopers. I'm not going to disagree with her, but saying one thing and doing another, I suppose, at the end of the day was her, or we're not seeing what they're saying. At
yeah.
the end of the day, she was just lambasting them, saying they've got no idea what they're doing. They should be doing this rather than that, and they should be looking at things that they're not looking at. So yeah, she really gave it to them.
Do you know? Do you know the tricky thing? And you know, that I want to defend the Fed because I was talking to a friend yesterday, and one thing I do believe is that while the central banks, use monetary policy to avoid inflation and avoid growth, I think more often than not they create it. I think they create this weakness in the market and everything else. So, I don't want to defend them too much. What I will say is that because of the way their mandate is structured, they're not meant to be getting out in front of anything. They are meant to be reacting.
Yeah,
And that's the whole thing, isn't it? They're a reactionary outfit, but in a way that's quite an outdated approach now because everything's so accessible, information's so accessible that traders are trying to get out way in front of stuff. It makes the sort of there's a kind of dichotomy in a way going
yeah,
on
that's
between
really
what.
interesting. I'd not thought about that. That's really interesting. Maybe they should
Yes.
get into the 21st century.
Well, yeah, maybe. But do you know the danger of them doing that? Of course, is that then they become like traders who
Mm.
are ultimately speculating and not going on, concrete foundations. But by the time the concrete foundation ultimately comes, the speculators have already kind of moved the market, if you like.
Yeah,
Because if you
yeah, they're
if
too late.
they're too late, because if you know the metrics you should be looking at, it's like, I always sort of say that the economy is like a tanker. It's not like a speedboat. So it moves so slowly. By the time the Fed have sort of like seen the data they need to see, and I don't think it's because they're stupid. I think that's just their mandate. But by the time they've seen the data they need to see, the information in the economy has changed. So they're always kind of behind the curve. So that interest rates come down, so they eventually they lower interest rates. But by the time, sorry, inflation comes down, so they lower interest rates. But by the time they've done that, the economy's already broken. They moved way too late, and to create that the lower inflation, there was a recession, or there is some sort of breaking kind of going on in the labor market. So that's just the way it's kind of done. But if they were to sort of say, okay, well, we will try and actually get out in front of this, so we're going to lower interest rates, even though inflation hasn't dropped yet, because it's going in the right direction. We will start to lower interest rates when inflation's at 3%, and it will still come down because we're not gonna tank interest rates, but we'll just ease them down to step down with inflation. That's probably the right approach. But that's not their mandate. The mandate is 2%, so they have to wait until it's 2% before they do anything. And of
Yep.
course, other things break on the way down for that stuff. So, right, I'm just going to check your thing. So let me see. So with the CAD yen tends to find a bottom in around about March, mid-March. Now, what happened here? Oh, that's pretty good. That's bang on. That's the 11th of March. There's the bottom. It tends to find a top around about the 9th of June. which is it's there. It's this one here. See, that's a bit out. So what would tend to happen with the CAD yen is this. This is the seasonals. So 9th of June is going to be about here. So we'd have this. It would come down until around about, you know, sometime in July, and then it drops down. But this bottom's okay. I mean, there's a few sort of like journeys on the way up, but that's what it would tend to do. Now, what's happened in this one, if you kind of forget this point, because that's quite extreme. I mean, it's not too bad. It's not too bad. But what's happened here is that this price is acting first. So it's ahead of the seasonals. So that would suggest that this is going to happen. I'm just going to check out this area here, though. Now that high is really, let's call it the 1st of May, which is in line, actually, which is in line. It tends to push beyond that high, but that is in line. So the first run, this particular run here, is right on the money. That's right on the money. You know, if you'd sort of like seen some sort of sell signal in this area down here, and you were following the seasonals, then you would say that the lineup is, you know, spooky. How good that is. It's out by a week, which is absolutely fine, actually. So that first bit's okay. But what tends to happen is with the CAD yen is it kind of does this, and it goes a bit higher, rather than sort of like coming down so deep. But it's not really a problem. You know, it's this dip isn't such a problem. The fact that it's dropped below isn't such an issue. I wouldn't worry about that. But this low here, let me just see when that was. This low here is really sort of like the first week in May. Now that would be 6th of May. That's fine. And there's a run up.
When I was
10th of May.
Christmas trees were tall. Oh,
hey?
that might get a phone call. That was the Bee Gees song, right?
Oh, quite possibly. 24th of May is the low.
I would give you the tune, but you know what happens when I do tunes. Paul gets an email.
Yes. 2012. Oh, it's just a little bit out, mate. It's not too bad, but it looks like the seasonals are just front running it a little bit. Just a little bit, you know. It's sort of like it would tend to come up and have a dip up. Yeah, looks like the seasonals are front running it a little bit. So it does suggest that we're going to get which actually, if the seasonals are front running it a little bit, then we might well be in a situation where this, you know, is going to come up and then start to drop. But it's not quite as in line as the dollar yen. You know, the dollar yen is pretty much on the money, the way that the seasonals are kind of moving. But it's not bad. It's not bad.
Okay. No, I'm prepared to hang on to it for a week and see.
Yeah. Yeah. Yeah, but you know, it's interesting, you know, when you sort of like look at all these different things and how you interpret it, you know, because obviously other people wouldn't interpret it the way I interpret it. They wouldn't really care. Because the other thing is about what's interesting with the yen, the CAD yen, is that if you look at the time it tends to turn, and interestingly, that's the 4th of July, so Independence Day. We kind of like get a turn in the CAD yen and probably the dollar yen as well. The amount of times that it works out is, let me see what it would be. So it's going to be around about sixes. 6 9s are 54. 6 9s are 50. No, sorry, not sixes. Yeah, it's around about it is around about sort of 60% of the time this dips. So it's quite a high percentage. It's got a decent it's got a decent chance of sort of working out. And as we both know, the you know, the actual the yen is so badly oversold. And I'll just kind of let you into a little kind of hack with the COT data.
Cool.
And the way that I kind of look at the COT data, which I do a lot of the work. I download a load of stuff with the COT data, but actually it's not an absolute essential thing to do, because you can quite easily just come over to investing.com.
Yep.
And look at what we got here, and go down to the CFTC at the bottom. Oh, sorry, make sure you're on a Friday. Doesn't matter what Friday it is, but make sure you're on a Friday. Go down to the CFTC positions here, and look for the yen. So here's the yen. Now these are the speculators.
Tell me why a Friday, Rob?
Because that's when it's released.
Okay.
Yeah.
That was a hard one.
Yeah. It's released on the Friday. So they write it for the Tuesday and then they release it on Friday, 3:30 p.m. US time. So this is the COT data here. So when COT data is sort of like in now this is the yen. So this is the yen, effectively against the dollar, and you can sort of have a look at against the CAD as well, which we'll do in a moment. But when you sort of start to see this stuff here, that suggests buying for the yen. When the speculators are going up here. Same thing here, and the same thing here. So what's going on here is there is selling with the speculators, and the reason that this is bullish is because it is at the extreme. Look at that. I mean, it's just we don't stay down here.
Yeah.
The last time that happened was 2014. Then look what happens. So it's almost like we don't know that they'll be buying imminently, but what this is saying is the next move is much more likely to be up, or the dangerous money really is now to the downside, because everybody's on the same side of the boat.
Yep.
In the same way, when you kind of like, if you saw that this was the high 29,000, then you'd know that when it got back up to that sort of area, then you'd be at risk of this selling off. Now, if you look at this, I don't know whether 2018, here's an example here, 2018, March 2018. I don't know whether I've got enough data here, but let's have a look at what happened to the yen. So early 2018.
That would be, I would imagine, very close to a MACD histogram, that look.
Oh yeah, quite possibly, mate. I mean, I don't know about that, but yeah, quite possibly.
I'll put one on my chart and see what.
Yeah, have a look. So early two.
Is that the dollar yen?
Dollar yen.
Yep.
This is the dollar yen. So this is early 2018. Look at that. This one here. This here. This is the move we're looking at. So what we're looking at here is the early 2018. We saw that COT data just turn. This is January 2018, right the way through to March, April 2018, dollar yen. So the dollar coming down, the yen strengthening. So that's why, you can use it as a bit of a hack, mate. I mean, it doesn't suggest, as I say, it's not a timing tool, but what it's basically saying to us is that the risk now is really to the upside on the yen. Now, if we go back and have a look at the CAD, obviously, if anybody's got any questions on that, then fire away. You guys are in the room with Jeff and I as well. We're just chatting, but you guys can come in. Have a look at the CAD. Actually, interestingly, the CAD's also a heavy sell. Now, that's pretty bullish. I mean, look at that, mate. That's an extreme. Not that I don't want to spook you, but that's a
it's okay.
Yeah.
Yeah, that's not good.
No, that's not so good. No. Yeah, so that's interesting. But the good thing with it is that you can sort of have a look at these on anything really. It's even got gold and it's got oil. Actually, interesting. I think that that oil is a selling opportunity today as well. But look, what you can sort of like see what's happening now when it's not at the extreme and it's in this buying area. That's bullish. I'm only looking for it to turn when it kind of reaches a bit of a crazy high or crazy low. But otherwise, the signal is good to say that there is buying and to continue buying is fine. But I like the extremes because what the extremes are suggesting is that there's a turning point coming, and if you can jump onto it, then you're in good shape. This is gold 2020. This is February.
Especially with currencies, isn't it? Really, because the currencies we know from time immemorial,
Yeah.
reversion to the mean instruments.
Yes. Yes. Absolutely right. If you look at gold 2020, so March and January, February, March 2020 suggests a sell-off for gold. So, you know, this is sort of like the way that anybody learning about this stuff, this is the way I would start looking through and see. So go back to the charts, have a look at 2020 and see how good they were at kind of predicting what was going on. Early 2020 is here. Now this was interesting. You see, no timing tool, but it was an extreme. It took a few more months, but ultimately there was a you know, an aggressive move down. And I think this is what when we saw it with the dollar yen as well. This is the point: is that because they're so extreme, the move has got a much higher chance of being aggressive. You know, when it eventually comes. And it was eventually.
Oh, the staircase.
Yes. Yes. Because everybody's on the side of the boat. Everybody's buying here. The speculators are all buying. So it only takes one little tip to just, you know, push the last finger off the top of the mountain and they're falling all the way down. So so yeah, you know, really what we're looking for is extremities, you know, that where the market just becomes overstretched. And you can kind of look at that and say, well, I mean, any time from here it looked overstretched, really. But at this particular point in time, it looked overstretched.
Well, you know, and we've been talking about this for quite a long time with the yen. We've also been talking about it in the reverse scenario with the Swissy.
Yeah.
Does that not make Swissy yen an attractive selling opportunity at some stage? Not now, but at some stage.
Oh, well, because the Swissies are a buy?
No, it was Swissy yen short.
But because of the because on the COT data it's a buy, you mean?
No, because of extremes.
Oh, I see. What price extremes? The price extremes.
Yes.
Yeah, I'd say so, mate. I'd say anything really against the yen. I mean, interestingly about the Swissy, if you look at the speculative positions on the Swissy, it's heavily short, which again
is not now necessarily.
Yeah, I mean but you know what this suggests is that the Swissy is actually a really good currency to be on the long side with, because of
it's my strongest currency this week.
Yeah, sure. And the extremities kind of like, you know, that's what they point to. You know, and it's one of the reasons I like the Swissy versus the pound, if, you know, if things can kind of
me too
turn out that way. Yeah. So so yeah, that's the little hack anyway, mate. That's what I would do if I was looking at COT data from an early perspective and not wanting to do the sort of data collection.
Absolutely. I like that. Thank you. Also, little your opinion, and I'm not suggesting anybody gets into the market ahead of the news. If that's your thing, then do it. But if things work out the way we've sort of suggested with the pound, I've got a feeling in my bones, and this is not a tradable thing for most people. Feeling in the bones doesn't mean a whole lot. And I tell you what, I learned something else last week that has absolutely nothing to do with trading, perhaps. Did you know we've got another brain? We've got two brains.
One in our stomach. Is that the one?
Yeah, you knew that, right?
Oh yeah, yeah. Yeah.
Which is where gut feeling comes from, right?
Yes, yes.
And the reason I know that now at 67 years of age, and you've probably known it since you're a baby, I don't know.
No, not that.
You know Michael Mosley, right?
Yes.
The guy that died last week or a couple of weeks ago.
Yeah.
I was listening to, obviously, an interview with him pre his death, and learned all of these wonderful things about the brain that we have in our stomach. So maybe I'm not so far out when I say a gut feeling isn't to be listened to.
Yeah, do you know, it's an interesting point actually, mate, because I suppose it's one of those things that we don't appreciate that we should connect to. And if we could connect to it, because I always say it to Molly, actually, my daughter, is, when she's, somebody will come round to the house and she almost kind of overcompensates, trying to make herself look really fun. So they sort of like want to play with her or whatever.
No, right.
And
Okay.
I always say to her, you need to just be yourself. And that's a really difficult thing to say to a child because they don't know what that means. And I said to her, and what that means is if your stomach is feeling uneasy, then you will overcompensate. So when you're being yourself, when you feel you almost don't feel anything, you feel completely relaxed. And I think that's the thing. We don't kind of connect with our body that way. We just feel, oh, well, I feel nervous, or I've got a gut feeling, whatever. Actually, as you quite rightly say, that is telling us something, and it's just how we um, not verbalize it because we don't need to say it, but how we I suppose understand it, with words, how we kind of label it, because then it becomes more of a conscious recollection, a conscious recognition of what's going on, rather than a subconscious thing that you just let get out of control. So I think it's a really interesting point you're making.
It is 100%. So
Yeah.
anyway, I'll let my gut feelings telling me
Yeah.
that pound Aussie is an extremely interesting scenario right now because we've got Aussie interest rates tomorrow, or the statement tomorrow, and I've got to tell you that there's no certainty that we'll get an Aussie rate interest cut this year.
Yeah.
In fact, it's I'll put it in a low, very low percentile factor. It's even possible that the RBA may go 25% higher. Sorry, 25 basis points higher.
Yeah.
Before the end of the year.
Yeah.
So if they were to come out and say something similar to that, or even be a little bit hawkish tomorrow, we're all expecting the pound or the BOE as well to be dovish, and pound Aussie short. It's just got this little thing for me at the moment.
Yeah.
I
Do you
don't,
know,
I don't know whether I should get ahead of that and have a little speculator, because I think it'd be too
well,
late once the news is out. I think it'd be too late.
I think you're right. I think you're right. And if that's what your gut feeling tells you, then it's always worth a nibble. But the reason I would make it a nibble rather than a bite is that what concerns me a little bit. I mean, if we're looking at the charts, there's an inverted head and shoulders here for the pound Aussie, but but if that's by the by, if we're just sort of like thinking of the fundamentals, because that's ultimately what the RBA statement will be. What concerns me with both the Aussie and the Kiwi in this particular environment is the lack of growth. And even though we're kind of like, I think we've come off the back of this kind of this race to the top, the race to the most expensive currency because of the interest rate hikes. I think that is turning now, and I think it's a much more, the environment now becomes about who's gonna need to lower the interest rate, because the economic picture is choking, and all of a sudden the United States is getting on board with that, because it hasn't been. The US has been a really stellar economy, 1.3 GDP growth last time out, which isn't bad, but it's not where it was. We were talking 3% growth, and now we're sort of coming off the back of the backlogs of COVID.
You're also talking debt to GDP ratio is very close to the same, isn't it?
Right. Exactly, mate. Exactly, and it's all sort of like, we're starting to kind of enter into this very difficult kind of period where I don't think we're getting economic booms. I think that the stock market probably will boom because eventually liquidity will come back in. But what concerns me about the growth currencies like the Aussie and the Kiwi is that they may well suffer in the next period, because I think that there may well need to be some genuine economic contraction, or not need to be. I think the economic contraction will come in. The hard landing, soft landing narrative seems to have disappeared. And as we know, as we talked about, the economy moves slowly. So if the economy does eventually feel the pinch from all these interest rate hikes, That might be this year, that might be the next few months, and anything that shows global contraction is not good for the Aussie. Not that it's good for the pound either, by the way, but that's the only thing for me, and that's the only sort of caveat I'd put on what you're saying. But I'd still think a buy. I think a nibble is well worth it, because that's still down the road. We're still sort of like talking. I don't think the US is going to be into a inflationary environment where they can lower interest rates until November, and that is global contraction time. Between now and November, I think it's global contraction time. So that's and that's just my reading. That's not from other commentators or from what I've heard. That's just my reading of the numbers.
So we've gone from 6, which is what the Fed were talking.
Yeah.
At the beginning of the year, right? To potentially 1.
Yeah, I think so.
Crazy, eh? Funny how things can change. And of course, this is not unprecedented. When interest rates were going up, it was the same story. They're predicting 1 and get 4, and they're predicting, so as you said before, it's very much a moving target. And I don't know, can you count on it as far as inflation's concerned? Can we actually say that we're certain that inflation's out of the way? It's on, okay, it's come down, no question. But is it gone?
I think it is, mate. Yeah, I think it is. I think now it's just a tidy up job. I think that there's a few sort of things that need to kind of get swept up. But I do think they've beaten inflation. I think they've done the job. And
it's hard to imagine that anybody could raise anything in terms of prices at the moment.
Yeah,
because the world can't handle it.
No.
The cost of living is ridiculous in every country in the world.
Absolutely right. Yeah, and also, well, and the economic pinch is starting to kind of being felt as well. And as the economic pinch gets felt, then inflation drops again, because we haven't seen any labour market layoffs, except for we saw a huge jump in the unemployment numbers. Going back to that last week, massive jump in the unemployment numbers in the States. Right. Well, I mean, that sort of tells us what we need to know. In a way, it's one of those things that breaks down. Now, I would be surprised personally if the RBA did raise interest rates, and the reason for that is that they haven't by the current number beaten inflation. But I do think that they're on the way, and I think that they're going to have a similar situation to the United States, where we really see those numbers drop off in full. Rather than in the next couple of months. But I think that those numbers probably are going to drop off, and they probably will have to keep them where they are. But I don't think they're fighting inflation anymore. I think now it's about waiting for the numbers to affirm what's already happening, and unemployment's jumping and all this sort of thing. That will all bring inflation back down, and drop it even further. And realistically, I think this is the problem, is that I think realistically they're at the danger of it becoming deflation, and I think that could happen in the United Kingdom first, because they've got to 2% before everybody else, and if everybody else then drops down again and we continue to drop down, I think we may well get some deflation, possibly. It might not get that dangerous, but I think that there could be a serious drop off if the unemployment picture continues to weaken as it has done.
Funny old world, isn't it?
Yeah, it is, mate. It is. Nothing. Which is, this is why you can never be comfortable in any particular market that you're in, and when you are, that it's time to be nervous.
Yes, you've got to be vigilant.
You've got to be vigilant. Yeah. This is why I look at the cotton and say, well, everybody's on that side of the boat. It's idiotic for everybody to kind of like think that there's not a turn coming, because things move in cycles.
100%. Interesting.
Yeah.
I wonder what the moon's doing at the moment.
Yeah.
And 30 degrees, and all that sort of stuff. Very much worth following. Did you look at DRO?
Oh yeah, the Drone Shield.
Yes.
Yeah, I love it, mate. I absolutely love it. I just don't like the price, but I love it.
No, but it was a tradable thing last week. It
was it?
Off. Yeah, it pulled back.
Oh,
Not too far, but it did pull back.
I didn't see it. I mean, I'm probably not tracking it vigilantly enough because it's on the other side. Because it's on the Australian market. It's not. I'm not awake when it's open.
Yeah, sure. Oh, look, it's so far today. It's closed now, but pretty much a doji
Oh,
day. So it could retrace again.
yeah, it's just that monthly chart is so. Oh,
It's
I mean,
crazy, isn't it?
it's tripled. I mean, it's just a mad trade that is.
That's crazy.
Mad. It's just what's it up? It's up 5x this year.
Oh, 10x.
10x this year.
Oh no,
God,
this year, yeah, 10x.
nice,
And
mad.
don't get me wrong, I'm not in it.
Yeah, but yeah,
I'm
no,
not in that
I
10x. Don't worry, I wish I was.
yeah, I see that. I do really like it though. I think it's a cracking company, but it's just I hate charts when they haven't tested because that always sort of that suggests that at some point you're going to just get a massive drop.
Yeah, you're
Um,
gonna get a thump. That's right.
but the way the world is, it's just that it's the right company at the right time.
I think so. A bit like uranium.
Yeah, even though that's had a bit of a stalling recently, hasn't it?
Well, it's having its biggest retracement in some time, and
Yeah,
I missed it. I told you that I missed that top,
you
and
were
it
selling
annoyed.
it at the top.
Yeah, annoyed the
Yeah,
crap out of me. I could be
yeah,
making a lot of money on that by
yeah.
getting
Well,
back in
because
now.
yeah, getting in now. Yeah, I know it's a difficult one to try. I mean, I suppose it's probably not a difficult one to trade because actually, technically, it's behaving very nicely.
Mm.
Um, but but yeah, I mean, I suppose not that surprising to kind of see these pullbacks before, because I think this is the thing with the uranium market. I think that there's the noise around uranium is very, very strong. Um, but we've got to wait until reactors come online and all this sort of. So it's still not actually being utilized. The actual power itself isn't being utilized to the degree it will be, and that's still some years out. And which is why that there's probably going to be spikes and retracements and spikes and
Yeah,
retracements and all sorts.
the bad part is everyone's talking about it. The good part is everyone's talking about
Yeah, yeah,
it. So
yeah,
it's a double-edged sword, you know.
yeah,
Um, but yeah, I just keep holding, I suppose. And
yeah,
it's if I miss the tops, I miss the tops.
yeah. It's
Simple as that.
not a big deal, mate. I mean, it's as you say, you don't make sort of like quite the same money, which is a shame because it would make things a lot simpler. But as long as you're gonna make a decent amount of cash out of it, then it's not so bad.
Yeah, I think we'll be around for a while.
Yeah,
I think are we done? I think we're
we
done.
are, mate. We are. Yeah, good one.
So I'll have a little think about this speculator I'm talking about on Pound Aussie. I think I've had enough speculating with CAD yen. That's going to give me heart palpitations
Yeah,
over the next
yeah,
week anyway. So
yeah. I know it's an evil one, the yen. It's
it
just so
certainly
expensive to
is.
hold, isn't it? That's the problem.
Yes, indeed.
Yeah.
It,
But I mean, I'm
and
in with you, mate. I've taken the dollar yen, so I've got nothing really to kind of complain about now. I'm taking it on to at least till Friday.
the good part is, as we've discussed, when it does go, it'll go fast. So
Yeah.
the holding cost won't be terribly important.
No, not at that point.
You wouldn't think. Right, mate. Have a great week.
You too, buddy.
And thank you, guys who stayed around. Not too many in the room today. Must be a holiday somewhere. I don't know. Have we got any holidays
Holiday from
coming up?
us.
Or are we done?
Um,
Done with Mondays. The King's not having another birthday, is he?
not yet. Not yet.
Cancer
Not there.
party or anything like
I think
that?
we got another 5 Mondays actually, and then it sort of gets a bit calmer
Oh, we'll be
because
on
we tend to
holidays by
do
then.
we take the summer off, don't we? Yeah.
Yeah. We'll be having a couple of weeks off anyway.
Yeah.
All right. Well, let's get out of here and have a good day.
Dandy.
Great week ahead, everyone. Thanks for being here and being our trading buddies. We will catch you at the same time next week. See you later. Bye-bye. And now. Hooroo.
Bye, mate.
Bye, mate.